Hello everyone. In this video, I wanted to talk about why we hold losing trades, the psychology behind it. So let's imagine that I take a position thinking that the market is going to fall. So let's say the market is falling and I have built a strategy for the past few weeks. So based on some strategy, I enter the trade somewhere here. And bef before I see a small profit, so I bought the put option or I went short. Shortly it goes in my favor, and suddenly what happens is that before, let's say I get 500 rupees, and before I could think of it, the trade suddenly gets big candles come, and the moment I see that the price in the opposite direction is so fast, now I see the reversal is very instant. I see minus 4000 loss. This is where psychology starts playing its own games. So how many times we have seen such things? The reversal is very instant. So by the time I am wrong, I don't get a chance to exit with a loss of 1000 rupees. I don't get a chance to exit here because most of the time I don't put stop loss. And for the past few days I have been making 1000, and now in one trade my every profit is gone. And now let's pause and think why the reversal are so quick. This is known as this is a fact due to a process called as liquidity hunting. So what is liquidity hunting is that when too many people expects a fall, for example here, as I expected, many people would have expected that it's going to fall, and this might have been some support that actually got broken, and it seems to be a breakdown, but this was a fake breakdown. This is called as liquidity hunting because of fake breakdowns. It's caused by big players, or they call it as smart money. They push the price just below the support where people would think that it would reverse. When it seems to be a broken that level, like me, many people would have bought put option. It's just to hunt the stop loss, because many people would have thought that it's a support and they would have put stop loss here. But it would have been a support, but they go a bit below that level and then hunt the stop loss before going above. And there are other set of people who think that this support got broken, and so they go put option. So whatever it is, because of liquidity hunting, these levels can get fakely breaked out. This is known as the liquidity hunting. And whatever it is, that's why when lot of stop losses gets triggered, I don't get a chance to actually exit at a small loss. And you see big candles, and suddenly the loss is unbearable. So once I see a big loss, my mind actually will refuse to accept this loss. This is called as the recency bias. So this is a psychological term in trading. So this is known as the recency bias, where we believe that it will bounce back or I can recover it. But it's not a logic, it's just our mind ego. And so let's understand what is this recency bias. Let's say from the past 4 days, I have been profitable. I am making money like 1000 rupees. Day 2 I make 1000 rupees. And similarly day 3 I have made 1000 rupees. And day 4, when I see a loss of 4000 rupees, all my previous day profit is gone, and now I have been identified myself as a profitable trader during this time. So my brain will start identifying myself as a profitable trader, and now taking a loss will feel like breaking that identity. So here I felt like a hero, and now if I accept this loss, I will feel like a loser, and this is known as the recency bias. The problem is the trading gives variable rewards. Sometimes it's profitable, sometimes it's loss. But this randomness wires our brain like a gambler's brain. It's designed in a way And if we chase one more win, even when the setup is weak, we keep the trade even when it is loss. And it's also called as loss aversion. So what is loss aversion is that it's also one of the reason why we hold on to the losing trade, because it's proven scientifically that our brain actually feels loss 200 times more painful. Like if I make a profit, if I feel 100% happy, for the same amount of loss we feel 200% miserable. This imbalances actually causes us to take irrational behavior in the trade. And the worst part is that, so let's say our market is falling and I enter somewhere here thinking that it will go down, and because it broke an important support level, and then as soon as I realize it's wrong, the market doesn't give a time. If you have observed, most often you get sudden big candle and the loss is so huge because of the liquidity hunting that I spoke earlier. And ideally it's fine, like we should have kept stop loss somewhere here, but anyway they hunt stop loss. Any stop loss around this region will be hunted because they know the retail traders keep their stop loss. Retail traders who wants to go short, they keep their stop loss here, and who think that support will act, they keep stop loss here. Both will be taken out, and we see such candles will have long wicks. And if you don't keep stop loss, by the time you want to exit, the loss will be so huge because of the big candle and the liquidity hunting. But what we do is, if you keep waiting, the market will reverse and the 4,000 will become 10,000, and eventually your capital will get wiped out. And so it doesn't matter, like if you are wrong, you have to accept as quickly as possible. That's why trading is not just about chart, it's more about discipline, and it's about learning where to keep your stop loss. If majority of people keep stop loss here, you should be able to keep here. But remember, like the smart money people know where your stop loss is, and stop loss hunting is their full-time business. And so it's not so easy as I'm saying. And the whole setup is actually designed in a way that punishes late entries, emotional reaction, and hesitation to cut loss. So when you keep winning for few days, the ego kicks in, and next the loss becomes unacceptable. That's where the damage happens. So discipline is, I know discipline is boring and it doesn't give so dopamine, but it's what saves life in trading. I'm not a SEBI registered trader, and this video is purely for educational purpose. You should consult your financial advisor before making any trading decision.